We're back for part two of the Three Laws of Wyckoff workshop. I'm joined by my co-host, Professor Bruce Fraser. Cause and effect on the menu today, Professor. What have we got to talk to the people about there?
Cause and effect is such an interesting law, and these laws are so important to understanding the foundational really attributes of all technical analysis in the markets. But specifically, these laws are all built into the Wyckoff methodology. So it relates to the idea of the first law, which is the supply-demand relationship, the balance and the imbalance, and so on. But the other nuance of the law of cause and effect is that a cause must be built. There's a period of preparation that must take place in the price action of a stock prior to the effect. The effect being either an uptrend or a downtrend. Uptrends and downtrends do not just happen. They happen for a reason. And the reason that they happen is really embedded in the formation of a cause, a preparation phase. And so this is what we're really going to talk about today. In the Wyckoff parlance, accumulation, reaccumulation are periods of trendless sideways trading that precede and are the preparation for an important uptrend. A period of distribution or redistribution are periods of sideways trading which precede a markdown phase in a stock or the market. And so these are very important concepts. And what's effectively happening is that in the causal phase, say, of accumulation, you have stock changing hands, and it's changing hands from either large interests or from weak hands to strong hands. And when stock gets into strong hands, it effectively gets locked up. And this locking up of the supply of stock makes it unavailable to trade because large interests have basically absorbed it. And this is what helps the market to go into its next subsequent uptrend. And so the reverse effect is that when these large interests decide to supply the market, distribute stock out to weak holders, they're effectively reducing their position, putting a lot of supply into the market, and setting up the conditions for a subsequent downtrend. And so that is the essence of the law of cause and effect. One of the ways that we measure cause and effect is through point and figure charting. So there's the horizontal counting method where you can count the size of a trading range in a point and figure chart and make estimates about the potential for how much a trading range is going to produce in terms of an uptrend or a downtrend. And so, Johnny, take us on.
You've done so much work in that area. Don't you have a recent special in that regard, Professor?
There is a special that's out there now that's available on how to construct point and figure charts. Very important, I think. The StockCharts point and figure charting engine is fantastic, and I just wanted to help people to understand how they could best build these charts that can be useful to them.
Really meaty stuff. I checked those out, and I'll tell you, my head's still spinning.
Well,
It's fantastic.
Thank you. And the thing to do is to make them and practice, and
Well,
get really good at it.
And you've got the blogs out there, too. There's many blogs on point and figure analysis, if I'm not mistaken.
Yeah, well, I've tried.
Absolutely.
There is a number of them and a lot of case studies.
Well, the second law, cause and effect, has definite scanning implications for us. Can we look for periods of trendless price action? And the answer there is yes, because trendless price action really can be the creation of cause, which precedes effect. And if I'm not mistaken, Professor, the size of the cause relates to the size of the effect. There is a direct relationship there, is there not?
Yes, there is. And that preparation phase can result in a large structure, large formation that can be seen in point and figure analysis and also in the vertical bar charts. And so we do a lot of work in the Wyckoff method on breaking down the phases of accumulation from beginning to end, which sets up the condition for a new trend, and also in distribution. And so there is a lot of work done in the Wyckoff methodology on horizontal point and figure counting and on price chart analysis using the vertical bar charts and doing phase studies.
Really is a wonderfully rich world of Wyckoff so that we can take a look at price action and have some meaning to it. Absolutely.
I think there's nothing quite like it. It's quite special in my mind. And I'm extremely enthusiastic about talking about it and studying it and teaching it and having you all become really, really good at it.
You taught this at the university level for what, 35 years or more?
Yeah, I taught over 30 years. I taught the Wyckoff method for over 27.
Wow.
And I've studied Wyckoff for 40. So yeah, eventually I'm going to get like super good at it.
Well, let's scan using the concept of cause and effect. So we're back to very simple scan, rate of change, 63 periods of the SMA 50. The scan engine lets us define how big or small we want the change. Our first scan was merely greater than 0. But what if we constrain the price action, bracket the price action, such that over that period it's less than 10, and 10 is percent, or it's greater than negative 10. So at the top end, the rate of change, and rate of change is a little bit funky. It starts at day 1 and goes to day 63 in this case, and it looks for something that's less than 10 and greater than minus 10. It could go beyond those parameters during that 63 period, but it's the start and the finish that makes the difference to the engine. So we're going to have 63 periods, SMA 50, less than 10, greater than minus 10. We're again going to rank by that 63 period segment of the SMA 50. Let's take a look at what that gives us.
Now, so Dr. Scan, let me ask you this. So what you're doing with that scan, which is so elegantly straightforward, is that you're identifying the conditions for the trendless trading range that you're trying to capture or identify in the scan. And this is for demonstration purposes. This is not necessarily the scan that you would ultimately use on a day-to-day basis, but more to reflect the scanning principles. But
it's very straightforward. It's something that people use a lot, rate of change, SMA 50, very popular. And we used it in our first segment on supply and demand. So it's continuing thematically, but it is effective. There may be better or preferable ways to scan for this, more sophisticated language, but we're trying to keep it simple for this period. So we have 646 results, a lot of results, very widely dispersed across industry groups and sectors. And let's take a look at a couple that we have chosen that really illustrate the possibility of trendless price action on one or more levels. Haliburton, what do you see, Professor?
Well, as we see here, there's a large trading range that goes back to February of this year. And that large trading range, which is largely bounded by, call it 25 at the high end and around 18 at the low end, is continues on to this day, and this is actually into November. November 18th. So these are historical charts. But notice inside of that we see a beautiful substructure there from July to September. And that is a beautiful causal structure that has the attributes of accumulation inside of it in its local accumulation in the lower part of the larger trading range. It's a beautiful structure that ultimately produces a higher low in mid-September and then goes into a beautiful uptrend, which is a swing trading uptrend. And that uptrend so far has been capped at around just below $27 and above the June high. And so you can see there that the cause there of a local substructure has produced a result which is a swing trading opportunity in Haliburton. And now it's back into the trading range, and we could look at a larger picture to see how big this larger trading range is. But your scan has identified this, and it's done a good job.
Let's take a look at our next candidate. That's Schwab. What do you see here, Professor?
Well, so notice the reaccumulation structure from June to September, late September, and that beautiful trading range that's taking place there has subsequently turned into a nascent new uptrend, which appears to be in force, has gone as high as nearly $85 and now is going sideways, which is a nice result, which appears to suggest that stock is in, at least for the moment, in strong hands. And again, this is through November 18th, so we don't see any trading after that. But there's the effects of a cause that's been built, which is a pause in an uptrend that subsequently turns into a nascent new uptrend. So cause and effect.
Fantastic. And in the world of Wyckoff, we actually have names for these sorts of activities: backing up, horizontal, last point of support. There really is an entire vocabulary and analytical series of steps to help us analyze and make sense out of the price action that we see. Your thoughts, Professor?
Absolutely. The thing that happens now, here we're looking at a reaccumulation case study, and whether it be reaccumulation or accumulation, there is a process taking place from beginning to end of a trading range when stock is going into strong hands. And that process is going to effectively change the way the stock trades. And so from the beginning of the trading range in early June to the end of the trading range in late September, there is going to be a change in the effective relationship of price and volume, and the way price interacts with the trading range and with volume as it goes from the conclusion of a reaccumulation into an uptrend. And we're doing a lot of work on that. That's a big part of the Wyckofian approach, is to understand those phases of accumulation or distribution so that we know when they're beginning, when they're in the middle, and when they're ending.
Thanks again for watching. Scan well, trade better. We'll catch you in part 3.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.